Hello learners, I'm your teacher Kings here today with another question on SOL trading. But before we continue, please like, subscribe and hit the bell button to receive more updates about the videos that we post. So today we'll be looking at a question from 2019, question 4A, which reads, the following list of balances was extracted from the books of Fiumbo at the close of the business on 31st March 2017. So we have the following list of balances which we have been given, taken from the book of Fiumbo on 31st March 2017. So I will not go through the balances and the amounts. Let's read the adjustments first. So under the notes, we have stock at 31st March 2017, 15,500. We have wages and salaries accrued, 6,000. Rent prepaid, costing 2,000. Motor expenses owing, 1,600. Then adjust provision for bad debts to 4% of debtors. Adjust provision for bad debts to 4% of debtors. Provide for depreciation as follows: office furniture 6% on cost, motor vehicle 7% on cost. Fiumbo withdrew cash from the bank 2,800 for own use, but no record had been made in the books. A purchase invoice of 5,000 was completely omitted from the books. So now the question says you are required to prepare the trading and profit and loss account showing cost of goods sold for the year ended 31st March 2017. Then the second question, the balance sheet as at the date. So this is the question that we have been given. Pause the video first and copy what we have been given so that you should be following me fully. So we'll start with the adjustments first. So let us make the necessary adjustments so that we know where each and every adjustment should be placed. So we have wages and salaries. For stock, it is just direct, so we don't have to panic about that, and we don't have to do anything. Just need to place it where it is supposed to be placed in the trading profit and loss account and in the balance sheet. So we have wages and salaries costing 14,000 from the list of balances. Then in the additional information in the notes, we have been given wages and salaries accrued 6,000. So we add 6,000 to 14,000 that we already have, so which should give us 20,000. Then we go to lent. Lent in the list of balances, we have it as 10,000 quarter. Then in the notes, we have lent prepaid. So any prepaid in the business should not be recorded in the current accounting because it is supposed to be recorded in the next accounting. So we need to remove it from the rent that we have in the list of balances. So we say rent, we subtract the rent prepaid 2,000, which should give us 8,000 in total. Then we go for motor expenses. Motor expenses costing 9,400. Then in the notes we have motor expenses owing 1,600. So an owing increases the expenses that the business needs to spend. So we add it to the motor expenses which is already in the business, which would give us 11,000. Then provision. Under the provision, we have provision for bad debts and provision for depreciation. So we'll break it down into two parts. We start with the provision for bad debts. So the bad debts that we have, they are costing 34,000. Then we are required to provide for bad debts at 4% of the debtors. So we get the cost of the debtors, which is 34,000, times the 4% that we need to provide from the debtors. So 4% of the debtors should give us 1,360. So this is the provision that we are providing for this current year, this current accounting period. Then we go to the provision for depreciation. We have two assets that we are providing depreciation. We have office furniture. So since this provision is saying we provide depreciation on office furniture 6% of cost, so this is straight line method. So we get the cost of the office furniture times the percentage that we have been given. So the cost is 70,000 from the list of balances times the 6% that we have, which should give us 4,200 kwacha as our current provision for depreciation on office furniture. Then we go to motor vehicles. The cost, we have 50,000 kwacha. Then they have given us to provide depreciation at 7% on cost. So if we provide 7% from 50,000, it should give us 3,500 as our cost for provision for depreciation, this current accounting equation. Then we have cash at bank. So under the adjustments, we are saying that Fyombo withdrew cash from the bank 2,800 for own use, but no record had been made in the books. So Fyombo, the owner of the business, withdrew cash from the bank 2,000 kwacha, but they did not make an entry. So now it is up to us to make the correct entry in the books. So when we withdraw cash, it is cash from the bank. It is affecting the money which is kept at the bank. So take note that you can withdraw goods or you can withdraw cash from the business. So you need to understand the two things. If you withdraw goods, the goods which you have withdrawn from the business, they affect the purchases. But if you withdraw cash, the cash that you have withdrawn from the business, it will affect the cash at hand or the cash at the bank, depending on where you have withdrawn it from. So here, Fyombo withdrew cash from the bank 2,800, meaning that it is going to affect the cash which is at the bank. So the cash at bank is 23,000. Then the cash withdrawn was 2,800, meaning that the cash at bank should reduce by 2,800, which should give us 20,200. I hope you have understood on that one. Then we also go on the drawings. Fyombo, the drawings will also increase since he withdrew the money from the business for personal use. So that transaction is what we call a drawings transaction. So the drawings will increase by 2,800, the amount withdrawn. So 7,200 drawings which we have in the list of balances, plus the 2,800 which has been withdrawn, giving us 10,000 kwacha. I hope you have been following the workings, though I have jumbled them, but you just need to follow on what I've been saying. Just need to follow on the adjustment which I'm saying. You can pause the video and write, copy what I've said, so that when we start doing the tables, you should be following. Okay, so now let us go into the drafting of the table and filling the details where necessary. So the title, you need to write the proper title of the table. Fyombo's trading profit and loss account for the year ended 31st March 2017. The title also carries marks, so please don't forget the title. The title is very important. You need to show what you are preparing. You need to show the examiners that you know what you are doing. So we start with the sales as usual, since this is final accounts for the sole trader. So we start small, we start simple, then we'll be doing the hard things as we go on. So today we'll be doing the sole trader, tomorrow we'll be moving to the manufacturing and so on. So the sales that we have in the list of balances is 191,200. So we indicate it where it's supposed to be. Then since in the rest of balances, if you check properly, we don't have the sales returns or sale returns inwards. We don't have it in the list of balances. So we continue. Then we have the opening inventory, which is the opening stock. So don't be confused with the word inventory. The word inventory means the same as the stock. So the inventory which we have is 21,000. So you write it in the middle of the columns. Then we go for purchases, and purchases we have it as 90,000 kwacha. 90,000 kwacha. Then in the rest of balances, we have a transaction. We have a transaction which we did not talk about it when we are doing the workings. I forgot that, but it is very important. So we'll do it in the table. A purchase invoice of 5,000 was completely omitted from the books. So a purchase invoice of 5,000 was completely omitted from the books. So an invoice, it is more like it shows the quantities of goods that we ordered on credit. It is a bill. So the business sent us an invoice of 5,000 which was completely omitted from the books. The same invoice shows unpaid goods of 5,000 kwacha, meaning that invoice, once it was sent and we did not enter it in the books, we have unpaid goods of 5,000 kwacha. So these unpaid goods, we need to add them to the purchases to give us the total purchases that as the business we purchased. So 90,000 kwacha as the purchases, then we add the purchases invoice of 5,000 should give us 95,000 kwacha. So that 95,000 kwacha is the total purchases that the business had. So we add it to the opening inventory, which should give us 116,000 kwacha as our cost of goods available. So now the cost of goods available, we reduce it by the closing inventory or the closing stock that we have at 31st March 2017, and that is only found in the notes, in the adjustments. So you need to differentiate between the opening stock and the closing stock. The opening stock is the one which has the date which is smaller than the other date. So here we have 2016, then the other one has 2017. So 2016 is much behind than 2017, meaning that 2016 is the opening stock, then the 2017 is the closing stock. And the other thing that you should know is that the closing stock is found in the adjustments, the notes, and the opening stock is found in the list of balances. So this is what you should know. So we reduce the cost of goods available by 15,000, which is our closing stock, giving us 100,500 as our cost of goods sold. So now our sales, we will reduce it by our cost of goods sold to give us 90,700 as our gross profit. So now we add the incomes to the gross profit. So when you reach this part, you need to check on the adjustments that you have, especially on this part of provision for doubtful debts, provision for bad debts. You need to check this out, because most of the times you'd find that this provision for doubtful debts would be found on the incomes when you are providing it as an expense, but why should it be found on the incomes? So like in this question, in the list of balances, we had provision for doubtful debts, which was 1,800. Then from the additional information, we calculated provision for doubtful debts as 1,360. So now we need to compare the two amounts, the amount which is already there and the amount which you have calculated. Which one is bigger? So the amount which is already there is bigger than the one which we have calculated. So you need to get the difference, subtract the bigger number minus the smaller number. When you subtract that, it should give you 440 kwacha. So that 440 kwacha, there are two parts of this. This is the amount that we enter in the trading profit and loss account. Are we supposed to put it on the expenditure side or the income side? So now, what will determine that is the two amounts that we have. The amount that we have in the list of balances is 1,800, and the amount that we have calculated is 1,360. So from the difference here, 1,800 is bigger than 1,360. So meaning that the amount that they provided last year was bigger than the amount that they have provided in this current accounting. So since there is a reduction in the provision, that difference between that reduction, we'll put it under the incomes. If there was an increase in provision, that difference we'll put it under the expenses. So take note of that. So under the incomes, we have provision for doubtful debts, 440. That difference, I hope you have understood on that one. Then another income that we have here is the discount received, which we have as 4,000 kwacha. So if we add these two incomes, they give us 4,440 kwacha. Then we add them to the gross profit to give us 95,140 as our net income or total income. Then we go to the expenses, less expenses. We have rent. So under the expenses, the best way for you to write these expenses without skipping any expense is to start from the top of the list of balances, then start going down, taking each and every expense which you have found one by one. So we have rent costing 10,000 kwacha. Then in the list of balances, we have rent prepaid of 2,000 kwacha. So like I said, the prepaid is not supposed to be in this current accounting. It is supposed to be in the next year accounting period. So we need to remove it from the current accounting period. So we have rent 10,000 kwacha minus less rent prepaid. So we reduce 2,000 from the 10,000, giving us 80,000 kwacha. Then we go to wages and salaries. Wages and salaries, from the list of balances, we have it as 14,000 kwacha. Then in the additional information, we have wages and salaries accrued 6,000 kwacha. So an accrued is an expense which we have not paid as the business. So now we need to find the total wages and salaries, the expense of wages and salaries that we have. So we need to add it to 14,000 to give us 20,000. I hope you are following with these adjustments. This is the most crucial part. If you miss this out, you are going to have difficulties in doing it by yourself. Then we go to discount allowed. Discount allowed has no adjustment, so you just need to enter it direct. Then we have motor expenses. Motor expenses has an adjustment. So as you are checking for the expense, check if that expense which you have found, does it have an adjustment in the notes or what? So you need to be moving slowly but sure. And again, in your paper you don't have much time, so you need to be sure of what you are doing. You need to know what you are supposed to do at the exact time. So you need to be diligent in what you are doing. So under the motor expenses, we have 9,400, and in the list of balances, 9,400. Under the notes, we have motor expenses owing 1,600. And owing is an expense, it is a credit. We are owing. So now we need to find the total expenses of motor that we have. So we add it to 9,400, should give us 11,000 kwacha. Then we go to provision for depreciation. We have office furniture. Office furniture, the provision that we have provided, it is there under the workings. So under the provision for depreciation, you enter the current provision that you have provided. You should take note that most of the times you will be given two provisions: the provision in the list of balances and the provision which you need to calculate. So that provision in the list of balances was already entered in the previous accounting period. So now what you need to do, you need to enter now the one that you have calculated in this current accounting period. So for office furniture, we have it as 4,200 kwacha. Put it there. Don't add with the previous one. Just add the one which you have found the current provision. Then for motor vehicles, we have it as 3,500, the provision for depreciation of motor vehicles. Then the last but not the least expenses, we have bad debts, which is 5,600. Bad debts 5,600. Then upon adding all these expenses, they are giving us 62,300. 62,300. So that's 62,300. That is the net expenses. You subtract it from the net income to give us 32,840 as our net profit. Net profit. This is the net profit that we are supposed to find. I hope you have understood all the adjustments that we have made and the way they are supposed to be made. So you just need to be following. If you have not understood, you just need to search for one of my videos. Just search for them and do another question which I've done as slowly as you can, so that you get the concept, and do more questions of this so that you familiarize yourself with these adjustments. Then now we go to the balance sheet. Fyombo's balance sheet for the year ended 31st March 2017. Like I said, do not forget the title. The title is most important here. It carries some marks. It helps examiners to know what they are expected to find in that table which you have written. So we have the cost, depreciation, and the net book value. Under the fixed assets, we have office furniture and motor vehicle. Office furniture cost 70,000 kwacha. Then on the depreciation part, pay particular attention on this part. The depreciation part, we need to add the depreciation that we have calculated in this accounting period and the depreciation that is already in the list of balances. We need to add the accumulated depreciation. We need to know the depreciation that this asset, office furniture, has accumulated. So if we add the provision for depreciation of office furniture, which is 2,000 already in the list of balances, and the one that we have calculated in this accounting period, the total should give us 6,200 kwacha. 6,200 kwacha. Then the net book value, subtract 70,000 minus 6,200 kwacha, which should give you 63,800 kwacha. Then for motor vehicles, the cost is 50,000 kwacha. Then if we add the accumulated depreciation of motor vehicle, the one that is already there in the list of balances is 3,000, and the one that we have calculated is 3,500. So we add them together and put them under the depreciation column. Then if we subtract the cost minus the depreciation which is there, we should give us the net book value as 43,500 kwacha. So you add 70,000 plus 50,000, giving you 120,000 kwacha. 6,200 plus 6,500, giving you 12,700. Then you also add what is on the net book value, which should give you 107,300 kwacha. Then we go for the current assets. Current assets. The stock, which is our closing stock, is 15,500 kwacha. Then the debtors. The debtors that we have is 34,000 kwacha. So the debtors, you need to put it in the first column, since we had an adjustment which involved debtors, and that adjustment was provision for bad debt. So provision for bad debts, now in the balance sheet we need to enter the actual amount that we calculated when we were doing the adjustments. So 4% of the debtors was 1,360. So that 1,360, since we provided for bad debts from the debtors 1,360, we need to remove that 1,360 from the debtors. We need to remove it. So you say less provision for bad debts, 1,360 from the debtors. If you subtract, it should give you 32,640 kwacha. Then we have the cash in hand, which is 8,500. We have the cash at bank, 23,000. So also here there is an adjustment which was made. They're saying that Fiumbo withdrew cash from the bank 2,800 for own use, but no record had been made in the books. So the cash from the bank was withdrawn 2,800. So we need to remove that cash withdrawn 2,800 from the cash that is there at the bank. 23,000 kwacha from the cash which is at the bank minus 2,800. The cash that was withdrawn, which should give you 20,200 kwacha as the net amount which is at the bank. Then under the current assets, we also have rent prepaid 2,000 kwacha. When you prepaid an amount, that amount to the business will be treated as a current asset. Someone is holding that money for you. It is an asset for you in the business. Okay, if we add the total current assets, should give us 78,840. Then now we go to the current liabilities. Current liabilities, we have creditors 16,000. We have wages and salaries 6,000. Motor expenses owing 1,600. And that purchase invoice in the additional information in the notes, purchase invoice which was omitted 5,000. That invoice, like I said, it is a bill showing the credit that you have, the money that you have not paid. So that 5,000 should also be included here under the current liabilities. So these are the current liabilities that we have in this question. So we add them together, they give us 28,600. So 28,600 we subtract it from 78,840 to give us 50,240 as our working capital. Then our working capital, we add it to 107,300,000 to give us our net assets, which is 157,540. So this is our balancing figure in this question. Then we go to the financed by. What financed this business was the capital. So the capital that we had was 134,700. To the capital you add net profit. So the profit that we calculated in the trading profit and loss account was 32,840. Upon addition, it should give you 167,540. If there is also long-term liability, you can add it to it, but since we don't have it in this question, so we just leave it. Then to the drawings again. To the drawings, in the list of balances, we have it as 7,200. Like I said, in those workings which we had, the drawings amount was increased to 10,000 kwacha due to that cash which was withdrawn 2,800. So 7,200 kwacha, you add 2,800 which was withdrawn, giving you 10,000 kwacha. So that 10,000 kwacha, you subtract it from the 167,540, which would give you 157,540 as our capital employed. So this is all about this final account question, sole trading. So under this question, you just need to know how to deal with the adjustments. That is all about the sole trading part. There's no such thing as it being difficult, but you just need to familiarize yourself with the adjustments. So continue just working hard with this final accounts, and you will be improving in your grades. This has been your teacher Kings. We'll meet next time with another question from final accounts.